All right, thank you for staying with us now. President Bola Tinubu has secured a commitment of $14 billion from investors during the Nigerian-India Presidential Roundtable and conference in New Delhi, that's in India. The president told prospective investors that Nigeria is a country where they are guaranteed return on investment and urged them not to procrastinate on their decisions to do business in Nigeria. Among the new investments are Indorama Petrochemical Limited pledging a new investment of $8 billion, that's US dollars, in the expansion of its fertilizer production and petrochemical facility in Eleme, River State. Also, Jindal Steel and Power Limited, one of India's largest private steel producers, has committed to investing $3 billion in Nigeria. Additionally, the president has approved the finalization of a new $1 billion agreement to bring the Defense Industries Corporation of Nigeria, DICON, to 40% self-sufficiency in local manufacturing and production of defense equipment in country by 2027. Take a listen.
It is in your hand. And I promise you, just don't keep quiet. Don't procrastinate.
All right, they are joining me to talk more about this development. He's the Managing Director and Chief Business Officer of Optimus by Afri Investor, Mr. Ayode Jebo. Mr. Jebo, thank you so much. It's good to see you this afternoon. Can you hear me, Mr. Ayo?
Yes, thanks for having me. Yes, good afternoon.
Great. I'd like to start with what the president said. He is saying that the opportunities in this country remains enormous, that foreign investors need to come in to take advantage of these opportunities. Do you agree with that? And can we highlight some of these basic opportunities?
Okay, thank you. Yes, the statement is in order. There's enormous opportunities where we check the demand-supply gap for a lot of major items in Nigeria. We'll see that there's still that gap and there's the opportunity. The question everyone will be asking is, if there's an opportunity or investment opportunity somewhere, why are people skeptical from taking advantage of that opportunity, both domestic, either domestic or foreign investors? That's the question that will be on everyone's mind. Why are they not taking advantage of that opportunity? Which is the question we should be asking of ourselves. You look at the capital importation data, FDI is almost at its lowest in almost 10 years, at around maybe $132 million for the quarter. So why are people not taking advantage of that opportunity in the country?
So the issue of investors' confidence coming here, how do we build that? Policy issues. The Minister of Trade and Industry, of course, and Investment is with the President in this trip to India. What sort of conversation are you expecting, Mr. Ayo?
Okay, thank you. I think, yes, why it's good to make those statements, especially looking at the statement also from the President to provide confidence. Then, and yes, the president has spent less than 6 months in power, and there's a limit to what can be done overnight. So coming back home is to see what do we need to do to accelerate or to make Nigeria attractive. The ease of doing business is really very important. Insecurity is also a major factor that we need to also look at. If the economy, if Nigerians themselves are a bit skeptical to invest due to insecurity, then foreign investors would also be very skeptical or be very concerned. And if they have to invest, would come at a very high premium in the country. You look at our exchange rate, while there's been a bit of improvement in terms of policy clarity, but there's also a lot that needs to be done within that space to provide confidence. You know, one thing about confidence is It takes time to build confidence, but it's very easy to erode it. And we look at the last 2 or 3 years, given our FX policy, a lot of foreign investors are also a bit skeptical. So this is also the time that we need to begin to rebuild that confidence. The president mentioned in the opening speech on working on tax multi impact of taxes on businesses. These are some of those things. Enforcement of contracts. These are the things that we need to look at to provide confidence. If this president promised to do a certain or to work with these new companies within a certain period, let's say, is it after 4 years, after 8 years, if a new government comes in, will they also honor the contract or the agreement? So these are the things, the policy somersault inconsistency that foreign investors would also look at before they begin to invest. But it's a step. You need to begin to talk it, then we need to begin to do it. That's coming back home to provide that confidence. Beyond the confidence, the implementation of what we provide the enabling environment. It's good to also remember that when you look at cost of doing business, so if I'm trying to attract business from India and the cost of setting up here is going to triple the cost of setting it up in Ghana, setting it up in Niger, it may make business sense to set it up in those countries and import. But if we take care of those orders, the market is already here. And that is what the president is saying. Yes, the opportunities are there, very obvious. But how can we make it more competitive? That if they are producing here, it may be cheaper to produce here than import from India and begin to sell finished products. These are the conversations that I think we need to accelerate and implement so that we begin to see that advantage.
Interesting chat with you, as usual, Mr. Ebo. Investors' confidence staying around that. We've seen in recent times that we have more foreign portfolio investments coming into our country, correct me if I'm wrong, than foreign direct investments. You are a major player in all of this. You understand this better than I do. But what could be responsible for that? It seems some investors just want quick profit and they want to run out of the market. What is responsible for that, even now that we're trying to unify the exchange rates, making the market more transparent than it used to be?
Yes, so I think investors would only invest for long based on the confidence that they have in an economy. So if I think that investing in this country I don't have, the confidence level is low, then I'll be looking out for short-term opportunities. If I see long-term opportunities, then definitely I'll be able to invest. Foreign portfolio investors, for them, they've looked at, even when you look at the data, it has declined significantly on a quarter-on-quarter basis. For last quarter too, if you look at the numbers, that's also declined significantly. Yes, we saw improvement in equities, that improved by about 2,000%. But when you look at the numbers, looking at previous years, so anything that has to do with FX, because there were a lot of, I think, was it yesterday that the the acting CBN governor said they want to clear about 10 billion naira worth of backlogs. So these are investors. We know within the aviation sector, some airlines have suspended, in some countries have suspended flying from Nigeria. So these are the things that dampens investors' confidence. The ability to repatriate their profits. You invest, and the time to take out your profits, to take out your money, exit the country, you need to queue for a long time. So these are the things that we need to begin to build confidence on. So after clearing the backlogs, while we're trying to see how that will be achieved, after clearing that, then we need to sustain that body language such that please come operate in my country at any time you wish to exit. I will be able to provide you with sufficient dollars that you can exit. Once there's confidence, we always say that there's no bank that can survive a run, no matter how strong you are. It is only confidence. You look at, when you analyze the banks, you look at their maturity profiling. For most of the 80% of those deposits will mature in less than 90 days. But the confidence that they have is that not everyone will come to withdraw at the same time. So that is how, whether it's foreign portfolio investors, foreign direct investment that we're talking about, we need to provide that confidence. If we have sufficient FPIs, as we progress, they provide liquidity in the short term. It will also attract FD, foreign direct investment, which are long-term investments over a certain period. We need to first start and grow our FPI, provide that liquidity, create that stability in our FX. Then before we can easily be attracting even the foreign direct investments.
Interesting one there. Now, this investment cuts across all sectors. Look at, you see steel, you see electricity, oil and gas sector, local manufacturing, deep mine production, and all of that. But in all of this, steel is notable here. $3 billion US dollars is what we expect from that industry. What other sectors of Nigeria's economy do you think foreign investors can really tap into to get, of course, more profit, and that will really attract them to come into our space? I know tech is also one space that we need to expand, and I think Indians are also doing pretty well around that space. What other sectors do you think, or what comes to your mind?
Yes, so I think one of the sectors that we can look at is manufacturing. We have not been adding much value to our resources. We export them in raw form. So we need foreign direct investment to begin to process these items into finished products so that we're exporting products. If we're exporting, beyond the effects that we generate, we also create the jobs. Rather than exporting raw materials, creating jobs for foreign countries and importing them as final goods. So I think manufacturing would be a good one that they can play in. And the agri sector is also a sector that they can play in. Mechanization is critical to improve productivity. So if we also look at this area, if we have sufficient production, also prices will stabilize. But before we can even get them to be able to play in the agri space, we have to take care of insecurity. So these are some of the things that we need to look at. You look at, I think, earlier this week, the CEO's manufacturing index was at the lowest around, I think, 53 points in the last 6 quarters, which shows that the perception, even internal perception, is dropping. For that, these are companies owners based on the surveys that was conducted by the Manufacturing Association of Nigeria. So we need to look inwards while we try to ensure that we give that posture to attract foreign direct investment. We need to come back and look at what are the realities. What can we begin to quickly do to instill confidence, to make us more competitive if we are producing in Nigeria, and to provide that assurance. As I mentioned, policy consistency, enforcement of contract, the PPP arrangement. How do we enforce contracts such that if a new government comes, the previous contract is not aborted?
Finally, the solid mineral space is where we're also looking at, where we have a lot of opportunities. Illegal miners have been, taking charge of that space, and government is talking tough with regards to this. I just want an overview of what are the prospects in that industry if things are done appropriately or how it should be done according to law.
Okay, thanks. In my view, I believe that the mineral sector is the next oil. It's an area, if we properly harness that sector, standardize it, formalize it, it will give us more effects than even oil. And that is why, you know, for most economies, even developed clients have passed through, when you have mineral resources that are fetching, that has value, they don't want, for the players in that space will not want it standardized so that they can take advantage of the opportunities there. So I think it's the new oil. If we focus on it, it can generate more effects than oil. And there's no better time to diversify our FX base beyond oil. There's no better time than that. So than now, rather, to do that. So I think that there's a need to focus, restructure that sector, and begin to extract value, significant value from the sector. We have a lot of mineral resources that are useful that we can also export beyond being useful to Nigeria. Because if we are able to improve on them, it means it will reduce imports, which will reduce demand for FX and increase export. By the time we organize that space where we export and we earn, even if we can't refine oil now, like the way we export crude, we may begin to export some of those raw materials before we begin to develop that capacity to start refining them. Or at least we would be able to enjoy significant FX inflow.
All right, there's a good way to live it. I must thank you. Interesting conversation as usual with you. Mr. Ayodeji Ebo is the Managing Director and Chief Business Officer of Optimus by Afri Invest. Thank you so much for your contributions to the program. We really appreciate it.
Always my pleasure. Thank you for having me.